Live at TFNN. Breakout Investing. With your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you 5 days a week on the network from 3 to 4 Eastern, just ahead of the Tom O'Brien Show. The phone number to use if you want to give me a call, talk about this market, same number, toll free, 877-927-6648. If you can't listen to the show live, don't worry about it. You can pick it up as a podcast over on iTunes. There are some apps on the in the iPhone App Store where you can also get it as a podcast. Don't forget you can listen to all TFNN programming on your smartphone as well. Very simple. Just plug those earbuds in, open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. And let's talk about Tiger TV. That is available on the homepage of TFNN.com. It is also viewable on your handheld device. If you want to look at charts live right along with me, you can use Tiger TV to do that at TFNN. The show is carried live on Channel 1. It is archived on Channel 13. All right, constructive day of trading for the market after the Nasdaq's third accumulation day since November 11th yesterday. Big percentage gains for the tech index yesterday. Big spurt in trading volume, not only on Tuesday, but also on Monday as well. So 2 straight days of accumulation for the tech index. That is making me feel a little bit better about this market rally. We're a little bit lower today, but volume tracking below what we saw yesterday. Not by much, though. We're only about 4% lighter than the 1.97 billion shares that we saw on Tuesday. So Nasdaq Composite right now down close to 5 points to 3,049. The S&P 500, see what that index is up to, off its highs as well, trading near a session low, down a little more than 7 points, 0.5% decline for the bogey to 1439. Nice day of accumulation for the S&P 500 as well. So here's a market that since November 16th, it's this day here where heavy volume upside reversal, day one of a rally attempt, but pretty much during this uptrend, it's been a market that has been kind of wedging higher without any volume, no real conviction behind the buying. But that all changed on November 11th. When we had a nice move up for the market. Remember, the Nasdaq Composite gapped above its 50-day moving average, and then again 2 straight days of higher volume gains for the major averages on Monday and Tuesday this week. So it strikes me as a market where money is starting, to come in from the sidelines here. Yesterday, I thought was important just because of the number of growth stocks that were moving. We talked about the risk on trade being on, nice technical breakouts in my growth screens, leadership starting to broaden out. So all of that is good, and it does make me feel a little better. I was like one of many people that was skeptical about this rally. It didn't prevent me from putting money to work because I didn't want this market rally to go right by me. So I nibbled at some stocks, and they're working. But when you start to see signs of accumulation, which we've seen, especially earlier this week, that's a good sign, and makes me feel better about the prospects for more gains here. The Dow Jones Industrial Average right now down 58, almost 59 points, 0.4% decline to 13,292. Today, folks, is the last day that you can take advantage of the Tiger Dollar promotion and get a 25% bonus match on any amount of Tiger Dollars you purchase over $500 at TFNN. You can purchase Tiger Dollars and get great discounts, get a lot of bang for your buck, basically, when you purchase newsletter subscriptions. Just a great money saver. So be sure to check out the homepage of TFNN.com for the Tiger Dollar promotion. We'll basically donate up to 10% of your purchase price to the Salvation Army. And if you sign up by the end of today, you'll get a 25% bonus match on any amount over $500. Okay, yield on the 10-year note today down a little bit to 1.8%. 30-year bond also lower, but not by much, 2.98%, back below that 3% threshold. U.S. dollar index also trading lower, down to 79.26, getting very close to kind of long-term support here at 79. Let's take a look at that U.S. dollar index here, and I've been saying that we may be getting oversold here, but we're also kind of coming down to a key support level at this 79 level. So if we undercut that, that could unleash even more selling in the U.S. dollar index. So dollar index continues to act weak. Euro continues to act strong. That's kind of the hand the market is being dealt right now. But as we know, a weak dollar typically is good for the stock market. So weakness in the dollar could funnel more money into stocks. Taking a look at gold today, after declining 1.6% yesterday, February gold down again today, but not by much, down $3 to $1,667.70 an ounce. January crude oil rose $1.58 today, 1.8% gain, settled at $89.51 a barrel. The January contract expired at the close of trading today, so starting tomorrow we'll be quoting the February contract as the new front month contract. February oil today ended at $89.98 a barrel, up 1.8% as well on the session. All right, talking about leadership broadening out here, we mentioned the Financial Select Sector Spider Fund. It is, big gains for the fund on Monday and Tuesday. Nice little technical breakout. Under a little bit of pressure today, but not by much. Down 6 cents to 16.51. Still within range here. This is not a breakout that has completely, the train has not left the station here. Still looks like it's within range here. And another ETF showing interesting technical action is the Consumer Discretionary Select Sector Spider Fund. It is in a similar technical setup to the XLF, two straight big heavy volume gains on Monday and Tuesday. It has reversed off its high today, only down 23 cents, mostly in line with the market, to 48.02. Some of the top holdings in the XLY are Comcast, which is ticker CMCSK, Comcast Corporation. See, this is setting up in a nice little base here. So, what's interesting is you've had some technical breakouts in the market, but you've got plenty of setups out there that, haven't quite gotten going yet. So, remember, when you're in the early stages of a market uptrend, it can take several weeks for the whole crop of leadership to come out. So we've seen some early breakouts. It could be, several weeks before new leaders get into position as well. So Comcast working on 3 straight gains. It's trying for a breakout here over 37. So Comcast showing relative price strength. That's a top holding of the Consumer Discretionary Select Sector Spider Fund. Other top holdings of XLY are Home Depot, HD. Of course, that's been a big winner, trying to hold on to its 50-day moving average here, but shares underperforming today, down 1.5% to 62.05. Home builders weak today after recent price strength. We'll get into that housing start data in just a little bit. But other top holdings of the XLY are Amazon and McDonald's. We'll check in on Amazon today, under a little bit of pressure after a bullish breakout yesterday over $2.55 a share. The stock is down 0.9%, down $2.26 today to $258.14. Not a lot of volume behind the decline today, so if you bought the breakout yesterday, no reason to be overly concerned here. And finally, McDonald's, also a holding in the XLY. This one's been not a great performer. Tried to get back above its 50-day moving average yesterday. Its 200-day moving average. Tried to get back above. It was rejected. Stock is near its session low now, down 59 cents to 89.93. Some other financial stocks. We mentioned Goldman Sachs yesterday. Good, solid breakout for Goldman Sachs. Decent price action today. A lot of stocks are coming off their highs after early strength today, basically following the market here. Goldman Sachs only down 33 cents to 127.43, but a nice technical breakout for Goldman Sachs yesterday. Then there's an interesting IPO in the financial space, ticker EVER, Everbank Financial. They're based in Jacksonville, Florida. Small little bank here. They had their IPO in May at $10 a share, and you could say a nice little technical setup here. The stock has been basing consolidating gains since early November. It is outperforming today nicely, up 2.2% to 15.23. So went public in May at $10 a share, now trading at 15.23, and we look at a weekly chart for Everbank and gives us a little different perspective here, but we see a stock that is starting to work on the right side of a base. This is one to keep an eye on in the financial space. You've got your widely held financials, and then you've got some recent IPOs that are worth keeping an eye on here. Everbank Financial, EVER, is definitely one. And another name to watch in the financial sector, Oaktree Capital. This is another recent IPO. It went public in April at $43 a share. Has not been a red-hot performer. It's been in rally mode lately, but it came public in April at 43. Right now, it's trading at 45.32. So you had a recent breakout for Oaktree over 44, and it is extending gains today. Maybe still within range here. You don't want to chase a stock when it goes more than, maybe 4 to 5% past a swing point. The swing point for Oaktree was $44 a share back in late October, early November, right here. But it's up 2.4% today to 45.32. So it's borderline extended here, but another new issue worth watching. How about that decline in Intuitive Surgical today? ISRG. This has been the stock, really getting taken apart today, down 5.8%, $31.52. Last trading at $515 a share. This is another negative research report by Citron Research, which, up until a few months ago, I had not heard of Citron Research. I always thought they were a small boutique, but boy, this is a company. When they say something negative about a stock, it brings the sellers out in spades. So they had some negative comments about Intuitive Surgical. Other stocks that have felt the wrath of Citron recently, Zillow, ticker Z, and Questcor Pharmaceuticals, QCOR. So ISRG under a lot of pressure today. Negative note from Citron. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Let's go up to Northern California, talk to Sam in Stockton. How you doing today, Sam?
Hey, Ken, thanks again for taking my call. I'm patiently waiting on this company call. Finally, I learned from you how to pronounce it. It's called Chihu 360.
Chihu, yeah, I was pronouncing it wrong the whole time, and somebody was nice enough to correct me. Right, Chihu 360. So yeah, if memory serves, now where are you in this? Right around 25 thereabouts, or?
Right, that is correct. And I just wanted to make sure that it is still, I mean, it's holding pretty much all the, it's 10, 20, 50, and 200-day moving averages, but I'm still kind of nervous about it. It looks like it's ready to break out, but it seems like every time he's trying to go up, somebody's pulling its legs down. So I don't know. You tell me.
Yeah, I mean, it's listen, I think it's fine to hold here. We talked about the strong breakout that it had. This was a few weeks back in early December, hit an intraday high of 28.16, and the problem was at that time the market wasn't quite right yet. It wasn't a market that's under meaningful accumulation. 2 straight days of higher volume declines, but it came right down to its 20-day moving average, found support, some volume in the stock Monday and Tuesday earlier this week. So it's hanging in there, and the most important thing is it's holding above its buy point, whether you call it 24.75 or even a little bit above that. So I think it's fine here. This is kind of an easy one now because you just want to put a stop in where you feel comfortable. If this market starts going the wrong way, decide where that stop is going to be. Is it 3% below your purchase price, 5%, 7%, whatever pain threshold you have? But you want to be careful not to let a loss get too big. But technically, it's recovering here, and I think it's fine to just give it to give it some more room. Okay, great. Thank you so much again. All right, Sam. Appreciate it. All right, Sam from Stockton, California. Chihu is one of these stocks. It's got a growth story that is you just can't not pay attention to. It is gaining market share from Baidu in China search. This is a company expected to grow earnings 40% or better this year and next. And in their latest reported quarter, the revenues were up 77% from a year ago. They did $84 million in sales, earnings up 25%. Earnings growth has decelerated a little bit in recent quarters, just like sales growth, but still a legitimate growth story here. And technically, I think the stock has is acting pretty well here. But when you're in aggressive growth stocks, again, always important to have a stop. You want to know where you're going to get out of the stock if it doesn't go your way. So I think there's potential for continued outperformance in Chihu in 2013. But price and volume is always what you want to be looking at. This one, still not under distribution at all. So that's a good sign. All right, we're talking about Intuitive Surgical. Negative report from Citron Research. Also, another big decliner today. It's just interesting. I was about to go on air, and I'm listening to the CEO of Herbalife, a guy named Michael Johnson, calls into CNBC and is rigorously defending the company. Herbalife sure does get a bad rap because it's a network marketing company. People question their revenue. But as the CEO pointed out, this is a company that's been in business for 32 years and has had several years of outstanding price performance. But the news today is that hedge fund manager Bill Ackman from Pershing Square Capital has taken a short position. Michael Johnson went on air and basically ripped Bill Ackman a new one. And anyway, stock right now down 10.9% to 37.85. We'll see how this all sorts out. One thing is for sure, the technical picture for Herbalife has been weak for quite some time. Downtrend fully intact here. In fact, why don't we take a look at a weekly chart? And this is a good example of what actually a good short setup looks like. You can see a stock that first started big move down earlier this year in the springtime, tried to rally back above its 40-week moving average resistance, then starts to face resistance at its 10-week moving average. So buying demand has been drying up in the stock for quite some time. So Herbalife technically very weak ahead of today's news, but we'll see how that story shakes out. When we come back, I want to talk about a note from Pacific Crest Securities talking about tablet sales. How's Microsoft doing? How's Apple doing? Market share, all that kind of good stuff. Interesting comments from Pacific Crest today. News from General Motors as well. Also want to take a look at Oracle and another software name that is breaking out to new highs today. We'll do that when we come back. Breakout Investing on TFNN. Stick with me, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Markets hanging in here pretty well. Two nice days of gains, Monday and Tuesday, for the major averages. Right now, we've got the Dow down about 58 points, 13,293. S&P 500 down close to 7 points, 0.5% decline to 1430. Call it 1440. And the Nasdaq hanging in there just fine, only down just over 3.5 points to 3,050. So this does strike me as a market we're starting to see more signs of accumulation, and that is a good sign. We did have the major averages break out over some key resistance levels yesterday. That was also a good sign. When you had volume behind the breakouts, that does bring a possible trip for the major averages back to their September highs. For the Nasdaq, you're talking 3196. That would be the high it's going to have its sights on. S&P 500, you're talking 1471, 1474, and for the Dow, you're talking a high of 13,661 thereabouts. So the fact that we did break out in heavy volume yesterday, certainly a trip back to the September highs is not out of the question here at all. Okay, Pacific Crest out with a note today talking about, surprise, surprise, weak demand for Microsoft's Surface tablet. This has all the makings of a clunker, I got to tell you. Shares of Microsoft in a nasty downtrend here. $31 stock back in September, now trading around $27.32. Probably going to face some resistance here at its 50-day moving average at $27.80, but Microsoft a little late to market with their Surface tablet. It has not been widely available for retail consumption. Apparently, they're starting to increase distribution, but not helping that much. Pacific Crest said that Microsoft will account for only 2% of the 107 million tablets expected to ship in 2012. Pacific Crest also noted increasing momentum for Samsung tablets that run on Google's Android operating system. When it comes to market share, by the end of the year, Apple is going to have 62% of the market, followed by Samsung and Amazon with 11% share each. Let's take a look at shares of Apple today, under renewed pressure, but trading in a tight range, only down $5.08, 1% decline to $528.82. Shares of General Motors having a good day today. When the government does eventually exit its position in GM, it likely is going to be for a multi-billion-dollar loss, but the government aims to be out of this position in GM in the next 12 to 15 months. News today is that GM is going to pay $5.5 billion to buy back $200 million of its shares at a cost of $27.50. That, of course, resulted in a big move for GM today. It is trading around $27.30, up 7.1% on the day. So, again, the government plans to sell its remaining stake in GM within the next 15 months, but it's likely going to be a multi-billion-dollar loss. Shares of Sirius XM. News here. They have a new CEO. The CEO's name is James Meyer, who has been president of sales and operations since 2004 at Sirius. It is he's taking over for Mel Karmazin, who's leaving February 1st. And if you take a look at a daily chart of Sirius XM radio here, looks like it's ready to come out of a nice little base here, doesn't it? You can see a base that started back in mid-October. 4 straight gains for Sirius XM, trading up 0.8% today to $2.98. So trying to break out. It is a stock that is showing some signs of accumulation, so that's a good thing. Does it break out over 3? We'll see. It is trying just underneath, trading at $2.98 right now. Also, a reinsurer up big today. ALTE, Altera Capital Holdings, soaring 22% to $28.25. News here is that it's going to be bought by property and casualty firm Markel, MKL. Deal is valued at about $3 billion in cash and values Altera at $31 a share, so it's still trading below the proposed offering price. Markel, ticker MKL, is a high-priced stock. It is under quite a bit of pressure today, being the acquiring company. You see a big drop for Markel, down 9.6% to $439.24. We did have some economic data today. Quiet week of economic data earlier today. November housing starts down 27,000 to 861,000 units. That was a bigger drop than expected. October starts were revised lower to 888,000 from 894,000. Housing starts for November fell a little more than 19% in the West, 5.2% decline in the Northeast. In the South, they rose 2.9% and rose 3.3% in the Midwest. Building permits, that was the good news. They rose more than expected to 899,000, up 31,000. So we mentioned the home builders under some pressure today. Money has been moving back into the home builders. You can see a little breakout for the ITB yesterday. It's not giving up much ground at all today, down 12 cents to 21.27 after a big gain Monday and another big gain on Tuesday. But look at the volume. Very, very heavy volume in the stock today. The fact that it's only down 12 cents and volume is considerably higher than what the ETF saw on Monday and Tuesday, that's actually some pretty decent supporting action there. Let's take a look at some other home builders that have recently enjoyed technical breakouts. Ryland Group holding gains, breakout for the stock on Monday. Good follow through on Tuesday. It is holding gains up 10 cents today to 37.49. And let's take a look at MHI. MI Homes. That's another stock. Good breakout on Monday. Good follow through Tuesday. Holding on to all of its gains. In fact, headed into today, it was working on a 7-session winning streak. It is only down 7 cents today to 25.38. So home builders actually hanging in there pretty well today on the housing data earlier today. Tomorrow, don't forget, weekly jobless claims are expected to be up 2,000 to 345,000. The final estimate to third quarter gross domestic product expected to come in at 2.7% growth. That would be unchanged from the 2.7% growth, which was the second estimate. Existing home sales also due tomorrow. They're expected to come in at 4.9 million units, up from 4.79, so looking for a small increase there. And the Philly Fed for December expected to come in a positive reading, +1, after a minus 10.7 reading in November. Taking a look at earnings, Oracle after the close. This is a stock that had been trading very well ahead of earnings. You had a technical breakout for Oracle yesterday, over 32.50, and excellent gap up. Heavy volume buying demand today. The stock is up $1.38, 4.2% gain to $34.26. So this is what you want to see. This is what you want to see if you're questioning the strength of a rally. You know, what stocks are moving, what stocks are under accumulation, what stocks are flexing their muscle. Oracle definitely flexing its muscle. It has been flexing its muscle for a few days now, but definitely under renewed accumulation here. Earnings of 64 cents a share beat the consensus estimate by 3 cents, up 19% from a year ago. Sales up 3% to $9.09 billion, slightly ahead of estimates. Oracle continues to expand into cloud computing or software as a service to keep up with dominant players in that field like Salesforce.com. So Oracle benefiting from better than expected bottom line and top line growth, and big investors definitely in Oracle, not only yesterday but also today as well. Another software play that's benefiting on the Oracle news. Let's check out shares of Workday. Good breakout for Workday today. Breakout over 53.68. The stock was recently trading around 55.96, up 4.8% on the day. Workday normally trades about 950,000 shares a day. It is already at 1.1 million shares, so volume slightly above average today. Yesterday, Stifel Nicolaus initiated coverage with a hold rating. Workday provides enterprise cloud applications for human resources and finance. But nice technical breakout for Workday today, WDAY. Also, earnings from Apogee, APOG. This is a small company, not thinly traded. We talked about Apogee yesterday ahead of earnings. Only trades about 155,000 shares a day. Market cap of close to $700 million. But give the company credit. Another solid earnings report. Stock is up 2.5% today to $24.32. Another breakout for the stock over $23.89. But to me, when you look at this technical structure, the time to buy was when it broke out last month from this consolidation here. Broke out over, $21 a share? Something like that. Apogee is a glass products firm. They work a lot in commercial, industrial markets, glass walls, glass windows. The earnings were up 40% to 28 cents a share, 5 cents above the consensus estimate. Sales were up 9% to $190.4 million. That was about $8 million above the consensus estimate, so pretty good numbers from APOG. Stock continues to perform quite well. Also heard from FedEx, FDX, shares of FedEx. Well off its session high, hit a high of 95.44 today, now trading around 93.57, up 1.3% on the day. FedEx is the number 2 U.S. package delivery company. Earnings down 11% from a year ago to $1.39, 2 cents below the consensus estimate, but the company did say that 11 cents of earnings were hurt by Hurricane Sandy. If not for Hurricane Sandy, they would have been closer to $1.50 $1.50, which would have been a nice beat. Sales up 5% to $11.1 billion. That was also nicely above expectations. So the stock is off its highs, but it's never good to see. But not a bad day, still up 1.3%. FedEx's Air Express business continues to struggle. Shippers looking for less costly ways of shipping goods, but the company did say that shipments related to the holiday shopping season were on track to set a record. So that is good. And finally, on the earnings front, GIS, General Mills. There's a stock that's been showing relative price strength ahead of earnings. Not having a good day today, though. Looks like it's ready to pull back and consolidate gains here for a while. Down 46 cents, 1.1% to 41.31. They made 86 cents a share. That was 7 cents above the consensus estimate, up 13% from a year ago. Sales up 6% to $4.88 billion, in line. International sales did well, up 19%, helped by the company's acquisition earlier this year of Brazilian packaged food maker Yoki Alimentos. So that is it on earnings. In the growth universe that I cover, let's check in on shares of Stratasys here. We'll look at the daily chart first and then the weekly. Stratasys, these 3D printing companies are very volatile. They tend to trade all over the place, but there is a fundamental story here that is worth paying attention to. Stratasys looks like it could be getting into position for a breakout try here. Let's take a look at a weekly chart for Stratasys. And what you have here is a breakout in November. Okay, here was your breakout in November, and then support at the 10-week moving average. So according to the buy rules I follow, when a stock breaks out of a base and you miss the breakout, it comes back to its 10-week moving average and finds support. That is a reasonable entry point. Maybe you would just maybe start with a little smaller position than normal. So it's within buying range here, but I don't like these big, heavy volume weekly sell bars here. You just got a stock that looks like it's under some distribution, yet its technicals, still don't look too bad at all. So I kind of have mixed feelings about Stratasys, plus the fact that they're just extremely volatile, very easy to get shaken out of not only Stratasys, but also DDD, 3D Systems, which we'll check in on DDD here because it had a nice breakout yesterday, and trading off its high today, but still it's only given up 11 cents. 3D Systems does look to be the leader in the group. All right, so that's a look at Stratasys. So I want to check in on Michael Kors here, too, because this is a stock I think 2013 is going to be a nice year for Michael Kors. Still working on the right side of a base here. Bullish day for the stock yesterday. Jumps above its 50-day moving average. Look at the stock today, though. Only up 6 cents to 53.47 after hitting an intraday high of 55. So we'll come back, take a look at a weekly chart for Kors because it's building a base, and I think we'll eventually see an upside breakout here. Still a very bullish growth story going on at Michael Kors in the retail space. We'll talk about Kors when we get back. A couple other names. Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Major averages bleeding a little bit into the close here, near session lows. Dow Jones down 89.5 points now to 13,261. The S&P 500 down 10 points, 0.7% to 1436, and the Nasdaq down close to 9 points to 3,045. At last check, when you have the indices bleeding like they are and selling seems to be intensifying, it's possible we could see volume come in a little bit higher than what we saw yesterday. Remember, NASDAQ volume yesterday was close to 2 billion shares, 1.97 billion. Right now we're tracking about 3 to 4% lower than that. So still a good chance I think we'll come in below Tuesday's level, which is a good sign. You don't want to see conviction behind the selling one day after a breakout. Yesterday on the New York Stock Exchange, 816 million shares traded hands on the NYSE, not in danger of coming in higher than that. We're right now about 8% lower than the 816 million shares seen yesterday. Before we went to break, we were talking about Michael Kors. I think this one has the potential to be a nice leader in 2013. I don't own the stock yet. I've owned it off and on in the past for my Ultimate Growth Stocks model portfolio. This is a classic example of a base-building stock, though. I think once the base completes and new institutional money, really starts to come in with conviction here, I think this is a stock that growth fund managers are going to want to own. A lot own it already, but there's plenty of room for more sponsorship for this stock. You can see back in November it came down to its 40-week moving average. Good heavy volume support at the 40-week line. It is now starting to work on the right side of a base here. So let's wait for a breakout to take shape in Michael Kors. I think it will at some point, but still a bit early with Michael Kors. Starting to come around a little bit to Lululemon here because it is continuing to show relative price strength, working on the right side of a base here. In fact, it's not out of the question that we see a little bit of a handle area form here, and who knows? This thing could try to break out over $78 a share. Stock right now is down 88 cents to 76.31, but if it does form a handle area, remember, a little low volume shakeout. Maybe the stock comes in 2, 3, 4, 5%, something like that. You do have a good base taking shape with Lululemon, and the weekly chart here, you'll see what that base looks like. You could call it a base on base pattern, or you could just call it here's the start of the base back here in April, and then another consolidation here. But technically, it's not looking too bad here. So another breakout candidate similar to Kors, but Lulu needs a little more time to finish this base. Shares of Regeneron under a lot of pressure today. This one finally looks like it's ready to, pause and consolidate gains here. 50-day moving average should be a pretty good support level for Regeneron at 163. The stock is down 2% today to 176.47. Looks like an outside day taking shape. See that intraday high, intraday low, exceeding the range from the prior session here on Tiger TV. So Regeneron under some pressure. I think I've got a chart here with some short-term support levels for Regeneron. We'll see the 10-day, 20-day, 50-day moving average. Now that it is below its 20-day moving average, certainly a trip down to that 163 level looks like it could be in place. And that's going to do it for today's show. Tomorrow, before the open, we're going to hear from KB Home Builder, coming out with earnings, and then after the close tomorrow, busy after close, after the hour session. Red Hat, Nike, Research in Motion, all due Thursday after the close. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Take care, everyone.